Hello, everybody. Good evening, good morning, good afternoon, wherever you are in the world. I am Coach Paul, and this is the Ola Prime's Market News Update. Tomorrow, we have a hefty list of news and data on the docket for the U.S. This includes the ADP non-farm employment change, advanced GDP quarter over quarter, and the highly anticipated FOMC statement, along with the federal funds rate decision. The markets are expecting the Fed funds rate to remain at 4.5%. Also, tomorrow, Trump is expected to be briefed on the discussions had with China regarding a tariff deal. These current expectations are that there will be a tariff truce extension for another 90 days. It is safe to say we might see some news headlines throughout the day tomorrow that could make the markets a bit volatile for us traders. The US dollar continued its strength against other major currencies today, despite some slightly weak economic data, while the equity indices, the S&P 500, Dow Jones, and the NASDAQ, all traded down on the day. Now, to start off the Forex currency list here, the Euro USD selling pressure resumed today, down 0.3%, as the EU-US tariff deal news, along with the lack of economic data, takes its toll on the euro. Also, the CAD USD dropped further by 0.25% in today's trading session, closing at 0.7278. Tomorrow, we have the Bank of Canada Monetary Policy Report to decide on interest rates changes, but it is expected that they will keep them the same at about 2.75%. And that is the overnight rate. The GBP USD fought off sellers today as it pushed down 0.3% before climbing back up to its opening price in today's session. GBP USD is currently trading at 1.3361 as of this writing. The Swiss franc lost about 0.3% against the US dollar today and is currently trading at 1.2486. Lastly, the New Zealand dollar lost about 0.2% on the day. Gold futures bounced today on the large volume after a 4-day losing streak, gaining $13 per ounce on the day, and is currently trading at $3,343 per ounce. U.S. Treasury yields were down on the day, and the JOLTS job openings data came in softer than expected this morning, likely helping boost the demand in the bullion. Silver futures found support at the $38 per ounce level and roughly closed flat on the day at $38.39. On the cryptocurrency front, Bitcoin futures had a relatively small loss on the day, about $850, closing at $118,275. Bitcoin futures are currently trading at $118,670 as of this writing and continues to consolidate within its 3-week range of $117,000 to $122,000. Crude oil futures continued its rebound today, breaking out of its 3-week range, gaining $2.20 per barrel on the day, and is currently trading at $69.20 per barrel. The nearest area of resistance to look out for is in the $75 to $77 per barrel range. Now, without further ado, it's time for our Quiet Markets live session, trading session with both myself and Coach Tiger. So let's get to trading. Hey,
What's going
what's
on,
going
Coach
on?
Paul? How you?
I'm doing good, Coach Tiger. How are you?
Great. I've been thinking all day it was Wednesday, but it's only Tuesday. when I starting the show on Sunday, I feel like my body thinks that's Monday. So
That
yeah,
is
all day I'm
funny.
like it's Wednesday, but then I'm like, oh wait, no, it's Tuesday. Never mind. I'm a day behind.
Yeah, yeah, and I actually get to watch you do the news tomorrow, which is not normal for me. So I'm
Oh
looking
really?
forward to that. Yeah, because you
Oh
do
yeah,
the
for
news
the
on
show. Yeah.
Wednesdays, right?
Yeah.
Yeah,
Well,
yeah.
that's why I was thinking this morning I had to get my news prepped because I was thinking it was Wednesday all day, and then I looked at the schedule. I went, "Wait a minute, today's only Tuesday. Paul's got it." Yeah, that whole
Awesome,
starting on
awesome.
Sunday just makes me think it's Monday. So makes sense.
I get it. I get it for sure. So, how was the
Yeah,
trading day? You get any trades in today, or no? Was it a kind of a boring day for you this morning?
a lot of hurrying up and waiting. I do have a couple that I'm waiting on that are fairly close. Yeah, one in the Nikkei, and I was looking at Euro Japanese yen as well because I think it was getting kind of close. But that's mainly just a technical only approach because I really like the technicals on it. But the challenge for me is it's not showing up as a bearish. I'm sorry, it's not showing up as a bullish signal yet from my fundamentals and sentiment point of view. So, uh, yeah, I mean, I tend to lean pretty heavily on my top setups page first as far as the fundamentals and the sentiment. But every now and then a technical setup will look so good I almost can't resist. So I got two of them. I got one of those, but yeah, the DAX in Germany is kind of close as well, and then the Nikkei. So it's really about the those two indices right now, and then maybe the Euro Jap. I'm just waiting on one more little pullback, so we'll see. We'll see if we get some. We'll see if we get some volume. It's currently bouncing around in a zone, but I just wanted to go a little deeper because on a smaller time frame, and I was actually going to show this as an example, just to kind of show people
Mhm.
how I kind of fine tune my supply and demand zones. So yeah, we'll
Yeah,
get into that in a second, but yeah, like you said, man, it's looked like everything kind of pulled back today on the indices a little bit, huh?
yeah. It was nice to see. It was nice to see a little bit of just a little bit of a pullback. Nothing crazy or anything, but
Mm-hmm.
I was mentioning in the earlier session that we did like kind of have we well actually let me double check to see. I didn't see what we actually ended up closing on here on the profile. Let me double check. But what I
Right.
saw
Yeah, I
was
guess
that
it's
like we possibly were going to have like an engulfing, a bearish engulfing candle. Yeah, it looks like we actually ended up having it. So on the ES, we opened above the previous day's range and we settled below the previous day's range. So bearish
mm-hmm.
engulfing candle of sorts. So it would be very interesting to if the market is able to rebound tomorrow. I mean, geez Louise, I would say uh, this is a bull market like no other. But seemingly, it looks
Mm-hmm.
like the market is like just hesitant, and it's probably because of. I mean, the amount of data coming out and the news coming out tomorrow is just
Yeah.
significant. And then on top of that, with the tariff deadline that we're talking about of August 1st, I think everybody is just,
Mm-hmm.
kind of on
Yep.
watch as of these last 3 days, to a little bit too, like nobody wants to be too antsy or anything to keep
Yeah.
to initiate new longs. So,
Yeah, it's back to the hurry up and wait spot, waiting on, like you said, the August 1st deadline, and not to
yeah.
mention today's data that came out. I mean, you had the I call it the cheeseburger consumer confidence, but it's CB consumer confidence. I just like to be playful with it. Uh, what is it? Something board. hold on a second. What in the heck is
Yeah,
the name of it?
it's the I think it is
Board.
the consumer
Conference
board.
board. Conference board.
Yeah,
Yeah.
conference board.
Conference board consumer confidence. Yeah, but cheeseburger for short just sounds better. Rolls off the tongue better. But anyway, yeah, you had it. I mean, it's more of an orange folder event. It depends on the calendar you look at. Like Forex
Hmm.
Factory, for whatever reason, has it listed as an orange folder event, so like a medium impact. But then when you look at some other spots like FX King, what is that? FX. Let me see here. Oh my gosh, I hit the wrong one. Forex Rebate King. I'm sorry, Rebate King FX. Their calendar has it listed as a.
I guess we got some music playing in the stream now.
Oh, okay. That's nice. That's nice and peaceful. Keep it up.
There we
Oh,
go.
they took it away. But
I
anyway,
was having a hard a hard time even hearing my own thoughts in my head. I think though. Oh, God.
but yeah, what I was going to say is Rebate King FX. That's another really good economic calendar site. It's got it listed as a red folder event, so high impact. Um,
Mm,
but yeah, so it really just depends. What I'm getting at is it was obviously a positive report, but then you had the Jolt's job openings that came out soft. So kind of mixed data. So I think that kind of adds to the fact that obviously tomorrow we got the rates decision, the trade deadline coming up. So yeah, with that mixed data, that I think just kind of put people in that hurry up and wait mode, and looks like they might have been taking some profits too. I mean, we did have a big pullback candle today, overall
yeah.
in the indices. So yep, just another hurry up and wait spot that we typically go through before rate cuts or trade decisions or other big deals. So, but that's
Yeah.
okay because I don't really have the dollar on my radar at the moment. The only thing I have the dollar on my radar for is for a potential pound US dollar short sale. That's really it. Um,
Okay.
Yeah, so basically everything's pretty similar to the way to where I was at yesterday. Any way I can get to sell the British pound, that's really the highest up on my priority list. Um,
Hmm.
and then Bitcoin actually jumped back onto my bullish signals. So yeah, the same remains bullish the indices, especially with these pullbacks we saw today. I'd be definitely looking for some underneath demand zones to possibly buy into. Again, the Nikkei is really the closest one right now. So I guess I can go ahead and show a chart of that back end if you want to flip on over, unless you had anything to show right away, Paul.
No, I actually told the back end to just share my screen for the sake of sharing a screen, so we can definitely share your
Oh,
screen.
oh okay.
All I was going to comment on was with your Bitcoin. Yeah, like I in my news I was mentioning how like Bitcoin has just been consolidating these like last 2 to 3 weeks, and it'll be interesting to see if
Mhm.
Bitcoin can break out of that relative range and just
Yeah,
keep making all
that
time
one there.
highs or yeah, right. So it's
The
going to be
retail
interesting though. I
range, I
mean,
call it.
yes, yeah, yeah. I'm not sure, like on your data or on your like sentiment data for Bitcoin, is it have like more bullish, or is that what's your rating? I know above 5 would be bullish.
Yeah,
Is it above 5?
right.
Yeah.
Yeah, so it jumped up to 7 today.
Mm.
So yeah, and the Jolts job report really gave Bitcoin a couple points of boost on that because I think it was at a 5 part of the day yesterday. It dropped down to 4 at one point, and then back to back up to 7, I should say, today. So yeah, it really in some ways it kind of acts like gold. I mean, it takes sort of the opposite end of whatever happens to the dollar upon a release. So
Mm.
if we're just going by the Jolts job reports, obviously that number failed by a couple 100,000 jobs. So slight negative to the dollar,
Yeah.
which meant it gave Bitcoin a slight boost. But yeah,
Yeah,
score
it's
of a
true.
7.
Yeah.
It looks like Bitcoin has been boosted by the seasonality, the trend, when we're looking at just the technicals. The sentiment itself isn't really helping because the big banks, last week's COT report, let me see. I believe they did a very modest, what did they do for Bitcoin? Let me just check real quick here. My Edge Finder's been acting up. It's been a little slow. Bitcoin, so modest 0.61% gain as far as last week goes. And at this point, that data's a little over a week old, right? Because the COT report is updated as of last Tuesday, so a week ago today.
Mm-hmm.
Today's Tuesday, right? Okay, a week ago today
Yep.
until the Tuesday prior. So basically, at this point, that data's a week old. But yeah, I mean, when that report came out on Friday, 0.61% increase on their long positions. So it gave it a slight increase, but nothing too crazy. So yeah, when you put it all together, obviously the retail traders are still net long as they always been, as they have been forever. So sentiment's not really helping Bitcoin out, but what is the technicals and then some of the economic data where Bitcoin's getting a favorable rating for the manufacturing PMI, the retail sales, the CPI, the PPI. So basically all the inflation data and the employment numbers as well, the employment change, unemployment rate. And then obviously tomorrow we'll see what the interest rate does because that's the last category that I look at when it comes to the top setups. So
Right.
yeah, I mean, I honestly, regardless of how the interest rate report comes out tomorrow, that wouldn't drop Bitcoin any more than one, maybe two. So it would still remain bullish, even despite that.
Mm-hmm.
Um, and let's see, what else do we have? So we had the rate, and we also had Canada's rate, and we also have Japan's rate decision. So yeah, it's going to be quite the busy day. And then obviously U.S. GDP as well. Yeah, so
Yeah.
that basically rounds it out. But yeah, it's
Uh,
going to be a
you,
fun day tomorrow.
I want to, just to quickly, just because of out of my own curiosity here, before we do get into maybe get into a gold trade at some point here and a Nasdaq trade on my end. I do like, what I'm really interested in with Bitcoin is if something is to happen, right? Let's say in the next this week or the next month or 2 months, however long it is, where something fundamentally changes in the economy, where the markets get spooked and any kind of sell off occurs. I wonder, or if we see like a spike in bond buying, like U.S. Treasury buying, as you see flights to safety, all of a sudden, like gold, like people start buying up gold starts breaking highs. I'm very curious to see if like an event like that, generally speaking, unfolds, what Bitcoin is going to do this time around. Is Bitcoin
Mm-hmm.
also going to act like more when markets get freaked out, or people need, let's just say people want to free up cash, is Bitcoin going to freak out to the downside and be a part of that selling, general market selling, to like just get cash back on the books to then be able to utilize somewhere else, or are people going to pour money in? I'm very interested to kind of see that next big event occur and see whether Bitcoin like evolves
Yeah, for
into
sure.
like a safe haven that people talk about, like it supposedly, it's what it's trying to be, or whether it continues to be a relative like risk on ish act assets. You could make the debate that it is less of a risk on asset than it used to be. You could make that
Mm-hmm.
debate for sure. I think, um,
Yeah,
but yeah,
yeah.
yeah,
Well, I mean,
very
yeah, I
interesting.
mean, Bitcoin's kind of a, it's kind of a risk on, appetite asset, right? Something I like to
Yeah.
look at just to kind of maybe put a blanket thought over that statement you made is just going in and typing in BTC dash or BTC USD dash XAU USD. So this is basically the Bitcoin to gold ratio, right?
Mm.
So essentially what this is telling us is, and it just does it on the daily time frame, but what it essentially tells us is if you're seeing prices going up, then that's more risk on appetite. because it's favoring Bitcoin, right? Bitcoin is performing better than gold.
Yeah.
And obviously the reverse is true, like over here when Bitcoin to gold went down. So that's more risk off. That's why gold is increasing in value relative to Bitcoin, right?
Right.
So yeah, anytime, just at a quick glance, anytime you want to see what our risk on, risk off appetite looks like, that's one of the best things I've found right there. And then also it helps you
Yeah.
decide if you between buying or selling gold. Well, you wouldn't really want to sell either one of those, right? But I'm just saying which one you would prefer to buy. I wouldn't be selling any of
Yeah.
those
No.
ever, but just the sentiment is so strong. But yeah, that's kind of a blanket answer. I mean, obviously when you get all that news come out, if it affects the risk on appetite, well, it's obviously probably going to push prices down
Mhm.
for me, right into a demand zone where I can turn around and take the opposite end of it. So, that's I don't know if that answers the question, but that's kind of the way I see it. And that's
Yeah.
why
I
I don't. That's
mean,
why I love bad news come out or bad news or good news, because typically the traders are they're gonna they're gonna trade off the cuff, right? An emotional trade, herd mentality, and then they just drive price right to a great
yeah.
spot to turn it around and take the opposite end of it. So that's
Yeah.
that's kind of the
Yeah.
way I see.
Yeah, I guess like kind of my thought is just understanding if the correlation changes really is that's a
Mm-hmm.
better way to sum it up. Just understanding, does the correlation meaningfully change between um, Bitcoin being either a store of value or a risk on assets. So I guess you'd be looking at the correlation between Bitcoin and gold
Mm-hmm.
slash Bitcoin and bonds versus like Bitcoin and the Nasdaq or something
Mm-hmm.
like that. Like start looking at those correlations and see how are they evolving in the next
Mm-hmm.
kind of in the next like spooky time that exists in the
Yeah, yeah,
markets
right.
where things get a little bit spooky and people start panicking. It'll be interesting to evaluate the correlations um,
Yeah,
because that could be like the dawn of a new era of markets essentially. I think when you
yeah.
start
Well, I
seeing
mean,
those evolve.
yeah.
Yeah.
And you'll see that in the VIX too. I mean, we've been talking about it lately, how just crazy low it's been for quite a while. But that obviously means people are quite complacent, right? Complacent with the uptrends. But obviously, when you see those spikes, that's where people are freaking out. They're selling the farm. They're going back to
Yeah.
cash, right? And then obviously it turns around. It typically does turn around. I mean, I love showing this chart along with let's see here. Yeah, just like the SPX, just as an example.
Yeah.
SPX just showing the kind of the inverse relationship. Let's see here. Yeah, it's kind of hard to see with the way it's set up, but the idea is, when you see the big spike in the VIX, well, it's because the prices are just cratering, right? That was from the tariff scare, right?
Yeah.
Back in April. So yeah,
Yep.
that's not really. It's not really going full screen like I like it, um, but yeah, I mean, the VIX tells a lot. The VIX tells a lot. The Bitcoin to gold ratio tells a lot. But at the end of the day, that's an excellent question. I like to just say,
Mhm.
that's a little deeper than I care to dig into, because at the end of the day, all I care about is the price action anyway, right? I mean, I love to know the basics of the economic reports that are coming out, but as far as the projecting and the guessing, well, I'm not an
Mhm.
economist. I'll leave that to them, and I'll just trade price action because that's all I really care about.
Exactly. Same here, brother. I think it's yeah, exactly. It's like it's no more than
It's easy to go down that rabbit
it's no
hole, right?
yeah, it's
Down that
no
rabbit
more than
hole.
a curiosity. It can't as like
Yeah.
us as traders, it can't be any more than like a curiosity. It's like one of those things where you just kind of when things start getting weird, you maybe just keep your eye on it and just be aware of the correlations and whatnot, and just just
Yeah.
be mindful, like, be observant, I think, because like essentially if you are asking yourself those questions and the time comes where it's definitely it makes sense to dig into them a little bit, for the sake of maybe expanding your trading like product horizon, like maybe it's like, okay, well, why does Bitcoin look like so good to trade right now on the futures, like relative to gold or the Nasdaq or whatever? And you start looking, and you're like, wow, the correlations are becoming like super positive. Like, so really, I can choose whether like between gold and Bitcoin, it's super positive. So maybe I can kind of interchange the two, whichever slightly looks like a better setup than the other, I can kind of get in one or the other. Or maybe it's the exact
Right.
opposite. Maybe they're just more negatively correlated, and now all of a sudden, if one of the other is setting up better, you can just take the opposite side of the trade, as long as the structure makes sense, for your strategy. So
Yeah.
interesting stuff.
Yeah.
I will stop rambling on about boring
No,
hypotheticals, but
no, that's good stuff though. That's good stuff because just knowing which one's going up, which one's going down, just that in itself, yeah, it gives you a little bit of a hint.
Mhm.
Obviously, we're obviously risk on because everything's been jumping up. Um, but yeah, with again, I'm fine either way because I mean, there's a way to make money with this either way. I mean, if I had a gun to my head and had to pick, obviously I'd be picking Bitcoin to trade right now, which makes sense because it's on my top setups page. And gold isn't on there at all. Gold is only giving me a reading of like 2. Yeah. So gold has
Mhm.
excellent sentiment because the big banks did increase their long percentages on gold on the COT report. Um, the retail traders are actually net short. Okay, so that's an excellent contrarian signal to buy long. Great
Mhm.
seasonality for gold. And then as far as the economic reports, they do have positive readings for GDP, PCE, and the interest rate. Of course, that will change tomorrow, possibly. But on the other side of
Mhm.
it, trend isn't the greatest. And then they're getting negative ratings for the MPMI report, the retail sales, the PPI, the employment change, and the unemployment rate. So, yeah, that's why it's basically got it as a neutral rating. I mean, if it weren't for the sentiment right now, then that would actually be in the negative. So it's just neutral.
Yeah.
Yeah, for obviously tomorrow's reports, they're going to be good for the dollar. If they're good for the dollar, they're good. They're negative for gold, and vice versa. If they're negative for the dollar, then gold will benefit. So yeah, I
Mhm.
just want some more information. And those reports, if they're negative for the dollar, then it may push gold right back up into a score of a 5 or higher. So then I would be looking for pullbacks, to try to buy into it. But that's the power of the economic data and sitting on your hands and waiting.
Yeah, that is interesting. That is quite interesting. I am
Now,
what?
uh, like right now, there's a lot of people speculating, so they're getting into trades today because they think they could, you know, project, or they think they know where the markets are going to go because of the projections. But I think, like I told you
Mhm.
last night, I mean, obviously the CME watch tool has still got 97% chance they're going to keep rates the same, but I don't know. I think there's an outside chance they could drop it. It wouldn't surprise me if they did.
Yeah.
So, like, I'd be afraid to speculate and get into trades, longer term trades on that now, just because of that. Like, give me the hard data first.
Yeah, I think if you see, like, I would say if like the Jolts job opening data that just came out was like horrendous,
Yeah.
um and the previous unemployment data was much worse than expected, I think we would have seen a cut today, or tomorrow, sorry, for sure.
Tomorrow. Yeah.
Given that it wasn't too bad, um I think that, like, yeah, I agree. Could there technically, is there a chance? There, of course, there is a chance. But I would be, I think, where my thought is on it is usually, I mean, what Powell likes to try and drill into our brains is to see consistent data trending over like a period of like a certain period of time. So if you see 2 or 3 months of bad data in a row, that's when he like wants to try to make a change, or make a different
Mhm.
decision, or a decision to change things. The only problem is I think we understand that that kind of lagged decision is usually you know not best, but at the same time, preemptively making a decision to change things can also be just as bad, if not worse. So, kind of like between a rock and a hard place, Powell is, and the Fed in general are. But they err on the side of caution, and it's been apparent for the last 4 or 5 years at this point. So I wouldn't
Yeah.
be surprised if they were later to the party than earlier. So
Yeah, and I
yeah,
don't
what
even
do you got there?
say because of this economic data we're looking at, but it's just the pressure he's getting, obviously from the
Mm,
Trump administration, but
exactly.
from everybody else. That's why I say, if I mean, yeah, I realistically think it's staying the same too. All I'm saying is it would not surprise me if he caved to the pressure. But yeah, when you look at all
Yeah.
the data, the recent economic data, I mean, we're still sitting right in the middle, so it's basically neutral. Obviously, if we had a negative, if we had like a score down in the 30%, the 20%, then that's one thing. But we're still right at 50-50. I mean, yeah, you did have the bearish jolts numbers, but you had some good jobless claim numbers just 5 days prior. So that's
Right.
just kind of a synopsis of all the data we've seen in the last couple months. Um, yeah, you got some bearish stuff for the dollar, you got some bullish stuff. So it's really not that horrible. It's pretty good, overall. But again, it just puts it in more of the neutral camp for me. So
Yeah. What do you think, man? I'll tell you what. Like if uh, oh well, actually, really quickly, Pluvio just joined the chat. Hey, Tiger and Paul. Hey,
what's
man,
going
how you
on,
doing?
Julio?
Hope your day's been
What's
well. I mean, it's been like only 5 hours or so since we've last chatted. I believe you were on the stream earlier, so it's good to see you again. Um, but yeah, like what I was saying was, um, I I would be I wonder what you would think, or like what the reaction would be if like on that super outside chance we did have a cut. That would be, I think the market would sell.
Oh yeah, for sure,
Yeah, I mean that would just be my
for
gut
sure.
instinct, for it to sell off, but we probably don't have to worry about that. But yeah,
Nah,
I
I don't
feel
think
like it
so.
would, and as
I'm
and
pretty
as I
sure it'll
say
be the
that,
same. We'll be talking the same thing tomorrow.
yeah,
You got something you're
exactly.
looking
Well, the Nasdaq's just kind of making a little bit of a downward move here. It kind of broke its trend. It had a relative upward trend in this overnight session. We can switch back to my screen,
at? Oh
back
yeah,
end if we'd like.
yeah.
What do we? We have a poll right now. Which market are you mostly trading? Well, for me, I'm mostly trading the indices, but I am also trading commodities technically. Rick, stop him in. Hey guys, hey man, hi Rick, how you doing? Good to
What's
see you
going on?
again today. Um, but yeah, so the here I'll tag the back end real quick.
Let's get Paul's screen up.
Yeah, but the Nasdaq's just been kind of ever since the close. It's been kind of slowly grinding upwards, and then just now kind of took
A
a
little
little
bit of a
bit of
drop.
a
Yeah.
downward drop there. Um, after seeing price action today, it is tough to build a long case in the very very short term at the moment, given the amount of selling pressure we had today, and like it was just like a slow grind of selling pressure today, and then going into tomorrow. I think clarity is just going to kind of come out after like let's just say 3 p.m. tomorrow. I think that there's going to be a lot of volatility after 3 p.m. And then on top of that, I mean, we have so much earnings news tomorrow. It's kind of wild. I mean, we have like Microsoft, Meta, which are two of the bigger names. I think we have ARMS, so we have a big semiconductor stock reporting. A couple of big banks. I remember Banco Santander was one. But yeah, there's quite a bit of high value earnings coming about. So in the
The old
afternoon
fangs.
session,
The
yeah,
old
or
fangs.
after
Some
the
of you know
after,
what do they
right.
call them now? They don't call them fangs anymore, do they? They call it something different these days.
Uh, well, you have the Fang plus T. Ooh, I think I might get long here. I'm getting long.
Oh, look at that! Look at that! Look at that!
All right.
Yeah, that dropped right into a little bit of a demand zone. Just
Getting
looking at the
long a couple of
hour.
lots. I and it's funny. I was like, it's going to be hard for me to build a case for a long right now, and then immediately on the order profile, I see like the massive sellers like drop through an area where there were some decent bids, like some decent sized bids for the overnight, just gets completely absorbed, and then it looks like sellers got like stopped and like stop hunted, and just it popped up, you see immediately, and there's that big wick there. So let's
Yeah.
see. Yeah, let's see what happens here now. I like this.
Well,
I
that might
wish I
have
could have
even been
gotten in a little bit sooner, but that's okay.
that might even be in my trade plan too. Let me double check it on my end. See how that candle closes. Yeah, because that dropped right down into a demand zone. I mean, it's kind of sideways when you look at the higher time frame, but 5 minute. Let me think about this here. Let's see how that 5 minute candle closes.
Yeah, and it's
Um,
about to close. There it is, closed. Beautiful.
I'm gonna pre-build it and make my final decision after I get everything built. I got to make it a little
Yeah,
quicker.
Pluvio, I wouldn't be surprised if it's choppy before the FOMC. I mean, today there was the obvious downtrend, but and then chop in the afternoon after 12 o'clock. We kind of just chopped up and down, relatively speaking. But tomorrow morning, I wouldn't be surprised if there's some volatility in like the first hour or so, but then if it like died out for like the 3 hours before FOMC, or like or at least 2 hours, it would not surprise me at all. And then the statement will come out at 2. The algos will just make the market jump up and down based on whatever the change of wording is in the statement, and then we would just be off to the races,
Off to the races. Yeah.
whatever which way this when Powell has his speech, and you can after the tone of his speech, and especially after the questions that are asked and how he answers them, we will just either there will
What
be
color tie he's wearing?
probably yeah, right, big upwards move or a big downwards move, or yeah. So I think I'm going to get out of one here for the sake of just taking. So yeah, I just got out of one contract. I'm going to leave the other one on at
Mm-hmm.
break even here now. So I took profit on one, leave the other one at break even, and this is kind of I what I should do. I'm going to keep a journal, I'm going to keep an overnight journal, kind of testing this strategy of when I'm getting in a couple of when I get in a couple of contracts, and I'm gonna, like, once I get to a 1-to-1, if I take one of the contracts off to just secure a gain and then leave the other one to run, I need to record in a journal for these overnight sessions of whether or not moving the runner up to break even or keeping it at its original stop loss, which will be better. Um,
Right.
I definitely need to record that, and over time, maybe over the next couple months or so, kind of see how it plays out. At least based on
Mm-hmm.
3 sessions of data per week, just get an understanding. Because like right now, like I'm probably about to be stopped out of this at break even here, which
Yeah, I
I
got in too,
really
but I
don't
didn't.
want.
I didn't get as good of a fill as you did because I was about 2 minutes later. I got to get quicker
Yeah.
about this platform, like pre pre preset it or something. See, it's not as big of a deal for me when I trade on the higher time frames because I got plenty of time to go in and build my trade out. But doing it on the smaller time frames, it's got to be a lot quicker.
Yeah.
Obviously, you know about that better than
No,
anybody.
I get that. No,
But
I no,
I
yeah,
liked
I
it.
no, I
I mean, it did hit a 5 minute, a little bit of a 5 minute demand. So we
mm,
shall see how she goes.
huge wick,
I
man,
was,
on this current 5 minute candle. My goodness.
yeah,
I mean, if there was ever indecision to be explained in candles, it would be these two candles that we're seeing essentially right now, back to back. I mean, the one with the big wick to the downside and now a big wick to the upside. Jeez Louise. It'd
yeah.
be nice to see some support come in right about here. I'm contemplating getting long one again right here, and then just having an extremely
Mm,
tight stop loss to try
yeah,
and take advantage of this pullback. Um,
yeah, yeah. You're on the
I'm just looking at
futures.
the
I'm
order
on the
flow.
NASI CFD. But yeah, they look pretty well the same. I mean, you got those. So obviously, that current candle wicked above the candles to the left, collecting liquidity. And yeah, the question is now, is it strong enough to keep going up? Make some new highs.
Yeah,
We'll see.
I
We
just
shall
got
see.
long. So I did just get long another contract, but I have my stop loss at like very close. So I would get on these two contracts that I have, my break even is 23,481 essentially, and my stop is literally 23,478.50. So I've got like 2.5, not even 2.5 points of stop on the Nasdaq, which is insane generally speaking. But
Mm-hmm.
the point is I already secured the profit on the one, and I don't mind giving away a tiny bit of that for like the small risk that I'm putting, the very small risk I'm putting on to have two contracts back to possibly get long and break through that 23,492 high that we just did in the last candle. I don't
Mm-hmm.
mind this. So if we look at
Yeah, yeah.
when the Nasdaq was like dipping previously in the overnight sessions, once it made that big run, like once it bounced, it didn't even come close to retesting the lows of that like swing low. Both times it didn't do it. So I have a
Yeah,
somewhat good
really.
feeling about it. Sorry, didn't mean to
Yeah,
cut
no,
you
no,
there.
no, I agree. I totally agree. I really like the NASI because it's still my most bullish pair or most bullish asset that I track. It's a positive 10. So this is so just as a reminder, bullish is 5 to 8, but 9 and higher is very bullish. So I just get to add the word very in front of it.
Yeah.
But yeah, I mean Nasdaq just from a 30,000 foot view, retail traders are net short. So using that as a contrarian signal, seasonality and trend, I'm getting a score of a 2 on those. So the technicals look good. The big banks, that was one that what did they do? I think that was pretty well neutral. Institutional positioning, COT. Yeah, so NASDAQ minus 0.16. So negligible. That's pretty well neutral. That doesn't really help or hurt the algorithm. But yeah, positive MPI data, retail sales, CPI, PPI, all the employment numbers and the interest rate, which again, that may or may not change tomorrow. But yeah, there's only two things going against NASI, and that's the GDP and the PCE report, the year over year. That's it. Just the two red,
Very
just the
nice.
two red numbers, and that's only minus 1 point apiece. So, you know, happy to jump in on this on a smaller time frame for sure.
So it's funny. I
And
got into like my third contract. I told you that I just got into my third contract, and then we just jumped up like 6 points real quick, and I just took it off
yep.
for some extra, another like $15 essentially. And now I've got my runner, which is my third contract. I have that now sitting at break even, um, for a quick, just a, I'll take, on micros, $47 on the NASDAQ for the night isn't terrible to be trading 3 micros and, get $47 on the NAS. So I'll just make this risk free now. Hopefully we just continue the bullishness here and we jump up and can hit my final profit target of 23,500. But sorry, I just quickly jumped in there
No,
because it
good.
wanted to update my position.
Good stuff. Yeah, I didn't get as good a fill as you did because, like I said, I was 2 minutes behind you. But I did get 20. Well, obviously, the CFD and the future are about 150 points difference when you look at a chart. So, yeah, I basically got
Mm-hmm.
in 23,363, which obviously would be different on your screen, but it's pretty well right where your bottom green line is. That's about where I got in. Yeah, that one right in there. Yeah,
Yeah.
the equivalents. Yeah, equivalents on
Yeah,
the
that makes sense.
CFD. Yeah. Yep.
I th- I think my first two contracts were at 23,478, which is just like down here. Oh, whoa, okay. That was quick. So
A
okay,
little bit of a pull.
my
Yeah.
I got stopped out right there that last contract, which is good. I'll take the 47. I'll take the $47 and move along here for another opportunity. But yeah, like the definitely could have gotten better entries on that original 5 minute candle there. Like we both could have gotten better entries, honestly. But
Mhm.
you definitely are playing this a little bit longer, so your time horizon is a little bit different than my time horizon.
Yeah.
So
So, like where you see that last white wick down, back down there where you got excited
mhm,
about it. If you take a left to
mhm,
the little 5 minute candle before the big move up, right where your
mhm.
moving averages are. So, like right above the 20-hour time at the bottom, 20. Yeah, that's
Okay,
the
gotcha,
that's the
gotcha. Yep.
so further down. Yeah, that blue candle straight down. That 5 minute candle. Yeah. So that's the candle I looked at as a 5 minute demand. So I've essentially got a stop loss right at about where your cursor's sitting, just about
That
a
makes
few points
sense.
below that. Yeah. So yeah, like you
Yeah.
said, a little bit longer time frame. Uh-huh.
Yeah, and you know what? Like I'm not like genuinely, that's exactly what I would be doing if I was looking to hold this for the next hour. Like genuinely, that's
Mm.
exactly where I would have my stop loss as well. So um, the only reason why I decided, hey, let's make this like shorter term and not like risk it all is because it just jumped up so quickly and at least I had more than my minimum position on, so I could kind of take advantage and bolster my prime challenge
Mm.
account a little bit tonight. So I
Yeah.
don't mind taking it
Well, I'm
off,
not.
but I think you could see a bigger move. I think you could see a bigger move overnight. Honestly, I think you could see a move past 2,500, maybe up to or 23,500.
Mm.
That's point of control on the day, and then if you are lucky, maybe 23,520 to 530 is where I would be thinking. Like maybe in the overnight, if it's a little bit bullish, it would go up to. So
Well, I'll feel a lot more comfortable if it can get above those big top wicks, close above all that
Yeah,
nonsense. If it does that, I'll breathe a little easier. I'll breathe easy either way. Tiny loss, right? Worst case
yeah,
scenario.
yeah,
But
definitely.
yeah, it'll make me feel a little better about this one. So, and then
Yeah.
hey, oh, it's past 8:30, so our calendar event. Let's go to the Aussie. Okay, so Australia CPI quarter over quarter, they missed expectation. They missed also on the year over year, and they missed on the trimmed mean CPI. So we got some negative Aussie data coming out. I'm gonna just look at my edge finder real quick and see what's that's gonna change. So Australia economic heat map. Let me see here. Okay, so inflation is going down, which is obviously good for Australia's market. It's just a negative number for the Australian currency. So
Mhm.
uh, it's always a double-edged sword, right? The inflation data, how
Yeah,
it
yeah, for
how it
for sure.
helps one market but hurts the other. It's just kind of an interesting dynamic. CPI.
That's so true. Um, I do have real quick. I forgot a little bit earlier. We are announcing for the quiet market session here a giveaway tonight. We are doing a giveaway tonight,
Oh,
like we did, just like we did last night for a 50K account
oh
challenge.
yeah, I
Um,
did see that. Yeah.
and yeah, and again, like we've stated before, there are some things that you have to do in order to participate to win the account. First, you have to subscribe to both the Ola Prime TV and Ola Prime Global YouTube channels. Really easy. You can find them just by searching like Ola Prime TV or Ola Prime Global. Um, Comment on the live session, of course. Make sure your email is in your YouTube bio or YouTube description, essentially your YouTube bio, so that we can actually contact you about the account. Like if you don't have the email in your bio, we won't be able to give you the account. And yeah, and then just stay tuned until the end of the stream and we'll announce the winner. And yeah, and we'll reach out to you. So please do all that. We love giving out these free accounts during these sessions. And
Heck
yeah,
yeah.
so I'll remind everybody again later on as well. I'm sure I'll tell everybody again maybe in like 30 minutes or so and just remind everyone. So, but yeah, can't wait.
Good stuff.
And looks like Pluvio had something to say here off topic. But what would you advise me to do? I won a challenge more than a week ago, reached plus 5%, just to mess it up later that day, yesterday and today. Now negative 4% in drawdown. I mainly trade gold, and yesterday's price action wasn't the best for my strategy. You think I should chill until post FOMC? Um, you know, honestly, great. Number one, thanks for asking us.
Yeah.
We appreciate you. Even just coming out to us to even ask that, because that is you are not alone in this kind of struggle. I think many traders have gone through something similar, and it especially I understand the relative disappointment you have because you were 1% away from passing the account, being up plus 5%, and now it's swung against you. But guess what? You're still in it. Number one, I would say. Number two, I think the main thing to learn from, like, first of all, before I even suggest maybe how to keep going forward given your current situation, I think the main thing to learn from this scenario is once you've gotten up to like a certain percentage of what you need to get to in order to pass the account. You might at some point want to consider adjusting your position size when this does happen to you again, where you are up big and you're about to be able to pass the challenge. You might want to kind of adjust your risk in a way where this situation isn't relatively possible in a short period of time. Like it would take a lot of trading to get you down to 4% drawdown from 5% profit on your account.
Yeah.
That last percent, maybe like that last percent, you would just grind it out with like micros or something, or like just a smaller position in general. Just try to grind out that extra 1%, really put the work in, pass the account without like too much stress or anything. But that, now putting that aside, now you're in your current situation, which isn't bad generally speaking. Like you're still in an okay position. I would say, I was just thinking actually, I think, isn't it 3% drawdown is where how the account, or oh no, wait, but with the, never mind, just kidding. So what I would recommend is, I think I would scale personally. I think I would want to scale back on position still in your scenario. Um, it's not fun because it's going to feel like you're doing a lot more work to just claw your way back to break even. But giving yourself more time to do that, I think, is important.
Mm-hmm.
So I just believe that reducing your position size and really focusing on just like the super confident setups that come your way, like where you feel really confident about it, and maybe you feel like 70% about it instead of 55 or 60%, whatever that marginal difference is. I would wait for those A plus setups, as some people call them, where everything is in
Yeah.
confluence with each other, and then you can go
Yeah.
for it. But what you were saying about maybe chilling until post FOMC, uh, I probably would if I was you. I think that's a really smart idea to wait. Just
Yeah.
let it, all the news come out, let everything just be done with, let the market
Yeah.
clear up. Like I've said before, my thoughts are like some of my like core thoughts with trading are like searching for clarity, not certainty. So you'll get a lot more clarity after FOMC. So I think you're dead on there. You're exactly right. Just wait for, honestly,
Mm-hmm.
I would just probably not even trade tomorrow in general,
Yeah. Yeah.
unless again, after FOMC and after Powell speaks, if something just you can't resist because it's such a good setup after, let's say, 3 p.m. Eastern time, and clarity just comes upon the markets and for you as well, and you have to take it, then fine. But generally speaking, I would probably just I'd watch price action tomorrow. I'd be watching the news, see
Mm-hmm.
how the markets take everything, and then move on to Thursday and continue. So
Yeah. Yeah, I mean, and as far as I'm thinking, and as I'm chatting with you, Pluvio, I'd be interested just to see, like, are you talking this was like one or two trades that, because it sounds like you dropped 9% in the same day, if I'm seeing this right. So you were +5, you finished at -4. So is it safe to
mhm.
say 9% decline in one day? If so, I'd just be interested to see maybe how many trades you did. Was it one or two trades? Was it 10, 15, 20 trades? But yeah, the easy answer, the first thing that popped in my head when I was reading is it's always position sizing, right? And then when you
Yeah.
have a couple, three losses in a row, some of the best traders, when that happens, they will literally close their laptop, get up and go take a walk and get away from their computer for the rest of the day, because there's times we come in and we're not reading the market right. So the market will
Mhm.
tell you, right? If you're out of sync with the market, by obviously giving you a couple, three losses in a day, right? So that's really what I've seen and what I've heard from learned from a lot of the mentors I follow is Yeah, no matter how much money you make, you lose two or three in a row, you just step up and take a walk. Get away from it. Maybe even just not return for the day, because the goal is we all want to make lots of money in the markets, but the main goal should be we should all want to be here 5 years from now, 10 years from now, right? Um,
Mm.
Losing 5, 8, 9% a day. I mean that's it won't be that long, right? So, but it's good that this happened right away, because this is the best time to learn this. But the easy answer is just cut back the lot size. I mean, I tell people all the time, because I get asked this question a lot. I'm like, whatever the minimum lot size is your broker allows, honestly, just do it for at least 10 trades. And then what one of my mentors told me was, Tiger, whenever you get bored making money, that's when you can start increasing your lot size. So do another
Yeah.
10 trades on that higher lot size. Same thing, Tiger. When you get bored of making money, increase your lot size. So if you just kind of stair step your lot sizes up in increments of 10 trades each way, then then you can
Mm.
finally max out at whatever your preferred loss is. Whether that's 0.5% like me, because I'm very conservative, uh, or if it's 1%, 1.5%. But yeah, you never want to risk any more than 2% ever on any one trade, right? Because if you're doing that, which it sounds like you might have done that, then yeah, it only takes 4 or 5 losses and you've lost your account, right? I mean, you've especially lost a challenge account, but 5, 6, 7 of those in
Yeah.
a row, you actually lose your real money account. So yeah, I'm not sure which broker you got, but whatever the smallest size is, just I promise you, if you just try 10 trades of the most minute size, then it'll be easier and you won't have to be sweating each trade, right? So, because yeah, 9% one day, that just sounds to me like you just wagered
Well,
way too much per trade.
well, no, he just mentioned that he did not. He it was over a streak of days, so he was minus two
Oh, okay,
percent one day, minus 5% the next. So he wasn't he wasn't
okay,
likely over positioning himself. He was just probably, just like he was saying, essentially a streak of losses. But
I
I
see
did,
now. Yeah,
it's funny. It's funny, Pluvio. I read your comment about it's 8% drawdown, and it's funny. I stopped myself from talking or like going into depth about it because I was thinking you had a futures account, and as soon as I like dove in my brain, I was like, oh, he probably has a Forex account, and it's different. Like the drawdown percentages are different.
no,
Like for you, it's the 8%. Um, for me, it's 3%. So the futures
oh, okay.
accounts have different rules essentially than the Forex. And I was like, oh yeah, Pluvio is a Forex, not a futures account. What am I thinking?
Yeah, so he's good.
But yeah, so
Well,
yeah,
yeah, that's it.
so yeah, that
You know,
yeah. Thanks
but
for
position size. That's what I would recommend.
thanks for yeah, and yeah, thanks for reaching out about it, and if there's
Thanks for
anything
being
else,
vulnerable. Hey, yeah,
yeah,
that's what this is all about. I mean, Paul and I have done the same thing. We've had some pretty
yeah,
nasty losses in our day, right? So, um, but we did the same thing. I mean, I
yeah.
talked to mentors, I talked to instructors of mine, and it just takes sometimes it just takes a little bit of a little bit of a owning up to maybe risking too high, and then that kind of slapped you silly a little bit, or at least mine did. Tiger, don't do that again. Okay. So no, that's
Uh,
good. Be vulnerable. There's no such thing as a bad question or saying a mistake, because we've heard all the mistakes because we've all done them ourselves. So good
yeah,
stuff,
I
man.
mean, yeah, I was gonna say I've been in a lot worse. I've been in a lot worse of a situation in a just pure like my own personal account. I've been in a worse situation where I'm up. Uh, my account is up, let's say about like 3% on the week, and then the next week I'm down 4%. And I have when it's your personal account too, that's a whole different set of you know psychological like
Yeah.
barriers you have to get through, because when it's like for me, I'm genuinely trading for a living. So uh you have to really build a fortress in your brain to be able to kind of talk yourself down and logically, okay, let's reduce position, let's take, maybe this upcoming week, let's take it a little bit slow, let's get back on track, let's et cetera, et cetera. A lot of
Paul,
the time, a lot of the times the answer for me is reducing position size. That is the answer. I'm going to
yeah,
say most of the time. So
that's what I've heard from every one of my mentors in cases like that. That's always the first thing that they say. So, uh,
yeah.
yeah, position size. But think about this, Paul. For you, and you'll understand this because you're a bowler, right? You get your challenge account or your demo account. It's the same thing as warming up in practice, right? It's easy to throw strikes, right? Then you get to the score, enter a tournament. Sometimes you can't hit the broadside of a barn, right? It's the same shot. It's just we overthink it.
Yep.
But in
Yep.
practice and warm ups, we're just letting her fly and striking every time, or at least that's the way it kind of worked for me a lot of times.
Yeah. No. I'm right there with you. It's so true. When it's different when the pressure is on. When the pressure is on, it's
Yeah,
a lot different for sure.
yeah,
When execution expectations are high, it's a lot different, and there's genuine consequence to your actions. And real quick,
yep.
before anything happens here, we have about 200 lots sitting on the offer at 23,495, and I think that I need to get long. I'm getting long the Nasdaq with a small stop loss here,
Get it.
um, because I think we're going to try to take out the volume that we have um, up in this 23,495 area. I think the market just wants to gravitate to it. And then also 23,499. There's another 200 contracts sitting there. So on the overnight, that's a
Nice.
lot on the overnight. So what I'm hoping is that let's see here with the emojis real quick. What I want to see is my classic. Where's my alien spaceship? I want to see that guy, that sucker, just
Suck
pull
it
up,
up. Yep.
be gravity to those prices there.
You got to have the magnet
I
next
would
to it too.
love, yeah, I would love to see this. Risk about 8 points to about somewhere between 10 to 20 points. This take profit is definitely a little high here, but I'm going to put it right where my little UFO light is, right in the middle of that. That's where my take profit's going to be. So, and I'm
All right.
likely going to, if we once we bump up it, like, or assuming that we do get some buying pressure here to try and bump up above 23,492.50. If we get to that level, like right at to double top at this like Wix high here, I'm going to move my stop up to break even. I'm not
Yep.
going to risk any more tonight than I have to. I'm doing well tonight, and this just looks too good for me to to just sit on the sidelines here. So I'll take the
Well, I got the
chance.
magnet on mine, so we'll see if we can suck it up. Well, good
And
stuff.
honestly, if we draw back in close to where my stop is, I probably will get long a couple more contracts. If we pull into like the 23,483 area, I wouldn't mind getting long a couple of contracts for a possible kind of like support to then hopefully then break those highs. But I don't think that that's going to happen. Honestly, I think we're either going to go through this high or we don't. So
Mm-hmm.
come on, do it, do it.
All right. Suck it up, magnet.
uh,
Nice hammer, Campbell. 1 minute. That looks a little different on
Nice.
CBD, CFD. I said CBD.
Tiger's on a different planet right now. He's thinking about
No,
recreational
no,
activities.
no,
Nice.
you can't do that stuff. It just makes me sleepy, and I don't like it. A little bit of
Oh,
kratom.
dude,
I'll take
yeah.
kratom. I don't like about it. Mix of kratom and water gives you like a tenth of the effect.
Okay. All right.
Yeah,
I've never had it
just
before.
get that.
I've never had kratom before.
Yeah, just get it at any vape shop, smoke
Gotcha.
shop. But just mix it with a little water. Tastes like dirt, but yeah, it just gives you that nice mellow, just relaxed, mellow feeling. Takes the edge off. It's nice.
Tastes like dirt.
Yeah, tastes like dirt. Yeah, it looks like grass. Tastes like dirt. Yeah, all it is a Southeast Asian herb. It's from Thailand, I believe. Just an herb they chop up, and they've been using it for thousands and thousands of years for their own supplemental reasons, pain,
Okay.
relaxation, that kind of thing. But it's not FDA approved or anything, but it's Tiger approved.
Yeah. Hey, I mean, let's be real. Like FDA approval, there are plenty of things that are approved by the FDA that are, questionable at best. So,
Mm-hmm.
you know, all right. We literally just took out that, like, we by one
Ooh,
tick, we
nice.
popped above that other Wix high. I immediately just moved my stop up to. I'm moving it up to literally $1 above where my entry is. So, oh, and look at that. As Coach Daryl would say, the skies just opened up. The two offers that were at 23,495 and 23,495.50 just disappeared, and
Oh,
and they
is that
bumped up to
spoofing?
20.
Is that
Uh,
like a form of spoof?
maybe. I mean, it's probably more so sellers realizing that the move is a little bit stronger than they thought. So like the
Mhm.
volume just went from it was at 23,495 and it just jumped up to 23,509. So
Nice.
right before where my profit target is. So I think that they just kind of realized it's not the best idea to stand in front of a train, or that's what my
Yeah.
hope is, that it's doing. So
Yeah.
that that's
Hey,
yeah.
back in, move it to my chart just for a second. I just want to kind of compare and contrast our position we have. So yeah, as far as me getting in, I got in obviously off the bounce of that demand right there. I'm a stop loss below. That green line is a 1-to-1. So as soon as I get to that one, as soon as my magnet pulls it up to that 1-to-1, then that's when I'll put mine to break even as well. Just enough to lock in enough to buy a piece of bubble gum at worst case scenario. So, but yeah, I ultimately got my take profit a little higher up. So I think I put that at, I do that. That was 23. Yeah, so pretty close to 3-to-1. It's kind of what I'm going for. But I need my
Yeah.
magnet to just keep on sucking her up. Let's make it a little bigger. That might help. A little more powerful of the magnet. Yeah.
uh, definitely. I mean, I will do the same with mine. Here we go. Come on. Yes. Please
Yep.
don't tick me out. Please don't tick me out. I know I'm being like, this is me, like, this is a good trade. I think generally speaking, like, this is a good trade. I think that we're going to continue to the upside. But I'm just not willing to put on much risk, uh, to, to see it happen. I don't want to put on the risk. So that's why I immediately moved it to like a couple ticks in the money, because I just want to keep what I made today. There's nothing wrong with trying to, preserve overnight session gain. But
Right.
nice, we just moved off of it. Come on, please just continue to move off of it. I would be greatly it would be greatly appreciated. Nasdaq, come on.
Yeah. But
Um,
yeah, this fundamentals I was just going over earlier for the Nasdaq, just showing all the blue is a positive, and then the only red, which is against it, is the PC GDP. So yeah, highest score of a 10. That's the most bullish asset I'm looking at right now. So that's why I'm okay with hopping in on not necessarily the greatest volume. Like if I just go back over, um, you know, I typically like volume a little higher up, but obviously we're in the after hours, so it's expected, right? Compared to obviously the intraday
yeah,
session, but yeah, just it's all right though. That was the whole reason I got in. I mean, I'm in it now, so we're gonna let her go. And as far as the smaller time frames, like the 5 minute, I mean, it really isn't as important to focus 100% on the fundamentals as it is if versus if I were buying this on the 4 hour time frame, right? The 4 hour demand zone. Definitely want the fundamentals in my favor there, but when you're on the smaller time frames, it's you know even with strong bullish pressure, you're still going to have downtrends, right? So you can still look at at a, a potential short for the correction because the corrections can be so big, plenty big enough to get 3 to 1s, 4 to 1s, at times. So yeah, that's
right.
basically what I'm saying. Is the smaller time frames, the fundamentals, while they are important, it's not near as important as it is the higher time frames. So hopefully I explained that
Exactly.
right. Yeah.
No, that's. I think you're dead on. I think you're dead on there. That's exactly how I would think about it too.
Yeah.
Pluvio, thanks guys. You have no idea how much it helps. I'm thankful I found Ola Prime TV and you coaches. It's unbelievable. I mean, it's our pleasure, man. I mean, it's
Absolutely. This is
that's
fun.
exactly what. Yeah, this is what I love doing this, and I love helping out anybody that I can, and Coach Tiger does too, and all the coaches
Love
do.
it.
We find great joy in helping anybody out in any way we can, and um, Tiger approved is probably more trustworthy than Magnet is magneting. That's funny. That's
Yeah.
I hope so.
In honor of Daryl, I had to put the tiger emoji up. What else? Oh, he puts the bowling up there too, doesn't he? Yeah, just to piggyback on what you were saying, though. I mean, I created my own YouTube channel, well before this, well before helping out with
Oh,
Thola
nice.
Prime, and I was doing it just because of exactly what you just explained. It's fun to learn, but it's even better and more fulfilling to pass it on to somebody. So, um, yeah, that's. I mean, I do this for
Yes.
free, pretty much, right?
I,
I was doing it
yeah,
for free on my own personal channel, and I just loved it. But got to have my bowling up
it's
there, right?
true. There's definitely a lot more, definitely a greater feeling helping others out, I think, than ourselves. And that's just in some people's natures. Like yeah, I think people that generally like coaches or people that want to teach, I think that's the whole idea is we enjoy the idea of helping other people be successful. So
Yeah.
yeah,
Pay it forward,
come
essentially.
on. Here we go. The bowling
Oh,
pins, the magnet, the tiger. It's all working. Please just
that's right.
let's magnet up to those levels. I mean, so the first area that we have to get through is 23,500, and then we want to see a pull up to 23,509. Those are the two areas we want to see. So
Yeah, I might take a quick peek since let's see here. Quick peek at my other alerts real quick, just to see where I'm setting over here. Yeah, Bitcoin. I still need a big pullback. I need about a $3,000 pullback before I've got any interest in buying anything. About the 113,850 level. 2-hour demand zone. Euro dollar. Euro dollar's not really on my list at the moment. Get rid of my neutral stuff. U.S. oil popped all the way up to a very bullish score. You trade
Yeah,
oil at
man.
all?
I haven't been lately, but I have been saying that I want to trade it. I want to start getting into it more, but I've been seeing the last couple days. Yeah, it popped up to its like higher end of the range yesterday, and then it broke through that like 3 week ish range today very strongly. So yeah, it looks like it's going to be some fun to trade. I might dabble in it a little bit within this next week or two for sure. How about you?
Yeah, possibly. Yeah, because I mean, you got this form of support, this form of resistance, this form of support. So we'll see. I mean, if I would have gotten in this thing, I probably would have rather gotten in down in the blue area. Let me see here, 4 hour. Yeah, because I just basically connected support and resistance historical points there. 2 hour. Yeah, let me just get rid of that rectangle for a minute. And I'm just looking to see. I think I would probably. I mean, it's wishful thinking, but probably the daily demand zone down here. I mean, it's wishful thinking because it's a little deeper, but yeah, especially now that it's trying to bust this resistance here. I'm gonna be super patient with it. Yeah, if I can get a pull down here, I might look for something like that. But I definitely need about a $6 decline, $6 or $7 decline.
Yeah, looks like
Origin strong. See, this was a very nice strong move up. So the origin of that move is obviously that candle there. Actually, if I just kind of do this, just kind of include. The one thing I dislike about it, though, it did kind of hang out there a long time. Like when I look at supply and demand zones, I honestly prefer that it doesn't hang out there like that long.
yeah.
There's a good example. Actually, I have a good example on Euro Japanese yen. Let me flip to that real quick. Yeah, this is it right here. So if I look at this candle, and I also wanted to show something on liquidity. Let me see here. So drop, base, rally, right? Actually, now that I look at that, oh, that's why I was on the wrong time frame. Yeah, okay, this is it. So 1, 2, 3, 4, pretty much 5 basing candles. That red candle there is the leg in, and then you had 1, 2, 3, 4, 5 sideways candles, and then a leg out. So even 5 candles is one more than I prefer. So I prefer 2 to 4 basing candles. And it's the same with regardless of the time frame. I'm fine in that zone, but 2 to 4 basing candles before the leg out, because anytime it's 5 candles or more, it's just too much time spent at that level. Meaning, a lot of the unfilled orders that I'm shopping for to fill the order up, to the opposite side, could be getting used up. So the less time spends basing, really, the better. That's kind of the way I was taught anyway. But yeah, 1, 2,
Yeah.
3, 4, 5. So this is right on the edge of my comfort level. Because again, that red candle was the leg in. This green candle is the leg out. So that would be your demand zone. Just the basing candles. So, but what I wanted to show is obviously I'm looking at this on a 2 hours time frame. Now, as you can see, I drew in another line for the 10-minute zone. So here's why I did that. If I go down to the 10-minute time frame and go back to that same zone, this is just one other way I refine supply and demand zones. So what I'm looking at here is 1, 2, 3 basing candles on a 10-minute zone. So I got my leg in candle, which is this big red candle, 1, 2, 3 basin candles before the leg out. So that just kind of fine tunes it a little bit more for me. Just looking at those candles by themselves. So I'm more interested in that as a confluence because it's going to the proximal line of the zone. So that's really my new favorite area right there, if that makes sense. But I include the 4 hour, or what did I have that on? 1 hour, whatever that was, 1 hour, 4 hour. Because if you look at the leg in candle and you look at the candle above it, which basically goes to the top of that range, you can see all the way down. You can see my volume is still pretty high in those two candles, right? So that tells me that I want to keep the 4 hour range. But as far as the confluence, that's the better looking demand zone on a smaller time frame because it's only 1, 2, 3 candles wide. So that's between my 2 to 4. That's perfect for me. That's what I love to see. But again, the 4 hour candle is valid because I got all this expanded range volume spread analysis candles, filling out the rest of the zone. So yeah, that's essentially how I fine tune that. Price obviously did bounce so far into the zone, but I'm just more so waiting for the confluence. I'm waiting for it to come down to the 10-minute proximal line of the 10-minute demand zone before I turn around and look to buy this market. If that makes sense.
Right. Yep.
That would excite me a heck of a lot more than just placing an order just off the 4 hour or the 2 hour, I guess is what I had it on. Yeah.
Yeah.
So yeah, just thought I'd point that out.
No, I get exactly what you're putting down there. I pick up what you're putting down. I love saying that.
Yeah. But again, I love the fact that you had all this retail junk sideways crap, right? So there's no imbalance in there. There's no order imbalance. The order imbalance is further down. How do we know there's no order imbalance in there? Well, because it's fair value. Price just easily went to the top and the bottom of that range. This is where a lot of people do range trading, right? Sideways range trading. But the thing is, they're playing with the retail traders. The big banks aren't trading in this nonsense. They're trading in the cheaper, deeper discounted areas like the supply and demand. So that's what I care about. I want to join in with the institutions. So that's why I'm after that one. But again, I want to just drop a little further for the Euro Jap. But my chart of the day, and then I'll pass it back to you. Sorry. My chart of the day is the Nikkei. This is my favorite chart. How much time we got? No, 9:25. Okay. 1 hour time frame on this. So obviously last Tuesday we had that big spike. And I think we were talking about it on the quiet markets because of the Japanese U.S. trade deal, right? Well, then Europe came along and did their trade deal. So kind of gave back some gains. Well, same thing. I got a 10-minute demand zone here. But what I wanted to show on this wasn't so much the demand zone as it is my master pattern indicator. So I'm going to shut off my demand zone indicator real quick, and I'm going to turn off my drawings. So now that I know I've got that demand zone right here, if I look at just strictly my master pattern indicator, this is my contraction box on a 1 hour time frame. So I love using this indicator on the 1 hour or the 30-minute, just whichever one gives me a better picture. So this is what I'm seeing. So just above that demand zone, I got my contraction point, which is where the buyers and the sellers temporarily agree upon price, right? Well, eventually the buyers went out and pushed price up. So that's collecting any liquidity, any little bit of liquidity that the sellers in this region are doing their stop losses, right? So catching liquidity up here, the banks step in and push price the opposite direction to collect the liquidity underneath that contraction box. Process repeats. They push price above this liquidity area. We know that because, well, first of all, there's a point there, but also I cheat and it gives me a liquidity line right there. Okay. So there's liquidity there. So the big banks come up and smack that liquidity. and then turn around and do the same thing. They push price down to this bullish liquidity underneath these stop losses. So basically what I'm getting at is that it kind of fans itself out, right? And it always goes just a little bit higher and a little bit lower each time because it wants to constantly raise price just enough to get the liquidity sweeps we have all heard about before ultimately finding the trade phase. So I'm anticipating that they push price down into my 10-minute demand zone to collect the last bit of this liquidity and then the unfilled orders from the demand zone before price goes up. So that's the anticipated trend phase candle I just kind of projected. But yeah, that's
right.
I just wanted to kind of explain that a little more in depth, as far as why I use the master pattern in conjunction with the order block tool, which is supply and demand, right? So hopefully that makes a little sense.
Yeah.
But it all springs from that contraction box on the 1 hour time frame. Up, down, up, down, up, down.
Yeah. we did see a little bit of a pullback in the Nasdaq off of that retest of that wick high. It pulled back about 6 points on the Nas. So we're trading right now at 23,487, and I got stopped out of that one contract, unfortunately, at a good old break even. So that's kind of the update on our trade that we had going on there. And I am going to re-announce that we are giving away the 50K challenge account towards the end of the stream tonight. We only have 30 minutes left on the stream. We're giving it away. Another 50K challenge account. You need to subscribe to both Hola Prime TV and Hola Prime Global YouTube channels, both of them. Comment on the live session, please. And make sure that email is in the YouTube bio. I can't stress it enough. You just can't win it unless you have it. So go into your channel, customize channel, go to your description bio, put the email in there, and you're good to go. And give the session a thumbs up as well. Give the video a thumbs up. That would be great if you can. That's not required. Just me politely asking. So yeah, and that's all. But we will be announcing the winner soon in the next 20 or so minutes. So
time be flying. Time be flying. Yeah, getting a little bit of a pullback on the Nazi, huh? Yep. Yeah, I mean, once price did hit that 5-minute zone on the Nazi, I mean, I do like how the volume spiked, doubled. The volume doubled up compared to the previous candles.
Yeah. Sorry there. I was just messaging the back end a little bit. Smash the like button as pre-market pulse coaches say. Yes, exactly.
Yeah. Guess we'll figure it out.
Yeah.
Yeah, that's what I was thinking of. All right, euro pound. Just gonna look at a couple of my other alerts here. Euro pound, I need about another 25 pip retracement. And then I might buy in that demand zone. Euro pound, I think, is still my strongest currency pair. Yeah, Euro pound is a 7. And I don't have a single other Forex pair that's giving me a bullish signal. Just strictly the euro pound. And that makes sense because the pound is obviously being sold in that aspect or in that pair. buying the euro, and all my pound pairs, man, they're super bearish, -8 to -11.
Yeah.
And then literally the only other ones I have, man, are Aussie New Zealand and Euro New Zealand. Actually, I need to look at Aussie New Zealand. That's the only other bearish pairs. Yeah, this is a thin list for me. The top setups page.
That's interesting, isn't it? It's
Yeah,
maybe a little bit of a um, an omen of sorts for the types of like the type of environment that we're in. So
yeah, I'm definitely not complaining.
um,
I mean, sometimes this list is twice this size, and it's hard to keep up with everything. Um, but no, this is easy to manage. I mean, I literally I have 4, 5, 6, 7, 8, 8, 9, 10, 11, 12. So I got 15 items, still on my bullish and bearish list, um, half of them are the pound. So like we've talked about a time or two already. I mean, I'll just basically take whichever one hits first. But hopefully I can get a couple or three of those pound pairs hit a zone at the same time, so that it just adds that little bit of confluence. But yep, got all my alerts set. So I'll just let my platform
yeah,
work for me, basically.
yeah, exactly. The Nasdaq is really turning down a little bit at the moment. I am looking at gold now, but
Yes, there is.
I was taking a look. We can actually go to my chart on the back end if you want. I'm taking a look at gold. I don't think I'm going to take a trade. The trade to be taken was probably closer to like 30 minutes ago or so, but because now we're kind of trying to break out of the recent overnight high that we made, and I'm not too much like I don't like to take. Let's put it this way: I don't enjoy taking breakout trades. Like the trade that like we
Uh,
were just in with the like with the Nasdaq, for example, and just like you
mhm,
talk about like getting in at a discount, like when the original trade that like both me and you got in, there was a discount to be had and there was some confirmation on the volume, like on volume on the candles and whatnot, that made sense. The
mhm,
order flow made sense to get long, and we weren't like right at the high to be broken. The second time I
right.
got in, where it was basically playing like a breakout trade. I only got in one contract
Mhm,
because number one, I don't like breakout stuff. But number two, also on the depth of market, we saw, there were signs that gravity could be pulling price upwards to get to liquidity. So for me, I just had to at least put on some sort of risk, and it ended up being a break even risk at that. But
mhm.
relatively speaking, if I don't see something super juicy, I will not take a breakout trade. It's because a lot of the times it's just like you would say, you're not buying at a discount. A lot of the times
Yeah,
you're likely buying at MSRP. Let's put it that way. You're buying
yeah,
at
yep,
MSRP and hoping that the value goes up.
yeah,
So
yeah. Like I mentioned, I think the other day, I've seen, I've made that work pretty decent in penny stock trading, and that's it.
yeah,
That's it.
yep,
Because I mean, if you think about it, it makes total sense. Because who trades penny stocks? Retail traders.
bunch of retail. Yep.
The institutions aren't dilly dallying with penny stocks. First of all, they can't fill their orders the way they would want to do it, right? So when you got everybody
Mhm.
with the mindset of, oh, the FOMO, right? Buy the breakout, buy the breakout. Well, it actually works pretty decent when you do the breakout, because that's what everybody in there is doing, because they're all retail traders, and that's just the way the mindset works. But uh, so yeah, it can definitely work in penny stock trading, because you don't have the big banks, scooping up the liquidity, taking the other side of it. So that's the kind of the
Right.
cool. That's kind of the fun part of it, is trading with the
Yeah.
novices, nothing but novices. But you definitely don't want to take those methods over here to the regular markets, because you get chopped to pieces.
Yeah. Yeah. Um,
Like toying around with them.
Pluvio just Yeah, right. Pluvio just commented, what's the difference between gold CFD and gold futures? When I take a look, both they seem identical. I have no clue about futures since I started watching these streams. I'm feeling like I'm missing it. So, both me and Tiger, I think, can answer this question, but I'll go ahead. So with gold futures, there is so the price action is going to be the same because it's the same underlying, right? It's just with
I'm going
the
against it.
CFD, there's like an ability to like fractionalize your position. Um, so like you can go as relatively as small as you want, fractionally speaking, or as large as you want. With futures, the minimum uh, risk you can put on is a contract, and that contract has a minimum tick fluctuation, price fluctuation that it. So the point being is. Um, you're locked into a minimum position with futures, which would be like the micro futures contracts. Like every one micro futures contract for a one tick move in gold would be $1. So on an E-mini futures contract in gold, if you were to buy an E-mini, every one tick move is $10. So the point being is your position sizing, your ability to scale in is different in the futures than it is in the CFD. Am I explaining that right, Tiger? I guess I believe that that's how it
Yeah.
works. Um,
I mean, yeah, I don't know the futures lingo, but that sounds right because yeah, like you said, you have to risk at minimum a certain amount, right? So
yeah,
um, in 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 the CFD world, of course, CFD stands for contract for difference. So yeah, he's exactly right. You can basically fractionalize down, um, to a much smaller amount of risk. Um, XAU USD, just as an example, it's it's not available everywhere in the world. Like I think it's technically illegal in the U.S. to be honest with you, it's just to trade on that
yeah,
signal. But yeah, I don't know all the behind the scenes. But anyway, yeah, the leverage works different. Um,
yes,
and it's and this trades in more than the lot size. He trades contracts on futures, but we trade in lot sizes over on the CFD, the contract for difference. So, yeah, I think it really just has
yeah,
to do with the leverage and the legalities, depending on the country. But yeah, I definitely don't know the best way to answer that except for yeah, futures has a minimum. CFDs,
right,
you have a fractional way of putting your risk on. But just as you can, but either way, I mean, you still got to monitor the risk. I think it's probably easier to
yeah,
screw up your risk in CFD land because you can over leverage yourself and totally blow your account. Um,
yeah. I will
but
say
yeah,
it is also it
so,
is relatively. I will say it's relatively easy in futures as well, but yeah, like it's
yeah,
essentially just your ability to get into such small size on CFD is would be the
yeah,
upside for that. If you want to risk even less than $1 per tick, essentially. Um, so the micro, and then I don't know how commissions work with CFDs necessarily. It's just I'm sure it depends on the brokerage that you have, of course, just like futures
yeah,
would. But yeah, so as long as you're okay with at the minimum risking $1 per tick on gold, then future you could trade futures and you could trade micro contracts. There's also certain margin requirements as well. Prop firms, it's different, but I'm saying in your own personal account, there's margin requirements. I'm sure they're just like with CFDs. There's just margin requirements that you're required to have, but yeah. So hope that answers the question. And then um, also, I have to so like to announce for the giveaway. I do have to let you guys know we do need to see comments in. We do need to see comments, and also it's if you have not already won a giveaway, we will then announce a winner. But if you've already won the giveaway before, you'll not be eligible at this moment. But if you haven't won, we will announce a winner then. Um, so yeah, that's the word that I just got from our production guys, and
Yep.
yeah, yeah,
Well, we got another little turnaround on the Nazi
love it. Let's
over the
go.
last
And
few minutes.
and and also gold just reversed back down. It tested its high that it like its little swing
Ah,
high. And like I was saying, I
yep.
don't like the idea of taking a breakout trade and then look at that, it reversed down, and now the
Yeah.
Nasdaq's going back up. That inverse correlation is rearing its head.
Yep. Sure is. Shoot. Gold. Let's see. Do I have a demand zone? I could probably see that little bottom in action as a little bit of a demand. See what that looks like on a 3-minute time frame. Yeah. 33. So 33.23 maybe.
You
Yeah.
know, I'm not much of a patterns guy. There's only a few patterns at most that I will ever really notice on candlestick charts, generally speaking. But I'm looking at like the 30-minute right now here on gold, and I think I don't know if you know patterns well, Coach Tiger, but
Mm-hmm.
this kind of this 30-minute chart kind of looks like a bear flag ish kind of setup. Like we've been going down here, and then we're doing this little slow grind consolidation on lower volume upwards to then maybe meet resistance right here at like 33.90 or something to then peer back down.
Mm-hmm.
Um, that's kind of interesting. I don't know.
Yeah. Oh, yeah.
I'm not taking any
Yeah. I don't
trade off
really.
of that, I'll tell you.
Yeah. No. I mean, I'm kind of like you. I don't really. I mean, I see the patterns, but typically when I see a pattern like that, I see what the retail traders are doing to see if there's an opportunity to see wherever they break out to then obviously take the opposite, right, as a contrarian. So that's what I do when I see like pennants and flags and trend line breaks and things. Like
Yeah.
it sounds kind of slimy, but that's just the way it is, right? You see what the herd is
Yeah.
doing, and when they do herd things, it tends to push price into a spot where I take the opposite end of it. it
Yeah.
it sounds so mean and so bad, but that's just the way trading works, right? You take what
Yeah.
the
And
crowd's doing.
like, I'll tell you what, like back in the beginning of my trading career a while ago, I mean, this was a long while ago, I did look into basic candlestick pattern slash volume pattern setups and like back testing them and trying to discern a probability based on certain conditions for those patterns, like how often it would play out, like bear flags and bull flags and range compression, like triangle range compression patterns and stuff. And a lot of the times it was like depending on how large of a sample size you were taking for the back testing that I did, it was a decent amount of back testing. It was probably I think it was like roughly like a year's worth of data. But to be honest, you should probably go way further back to kind of span through multiple time periods of like maybe there's like a slump in there, a boom, whatever. But it
Mhm.
didn't amount to much more than like a 50 to 60% like possible win scenario. And that's assuming that you execute perfectly. That's assuming every opportunity you get, you execute it perfectly, at the trade perfectly, and you're able to get in, get out, which we all know as humans, we are not perfect and we do not execute perfectly. I don't care how good you are, unless you have an algorithm that you've written that is essentially foolproof. Oh, look at the NASDAQ. It is jumping. I'm going to move back.
Yeah,
Um,
it
there you
is.
go. Let's go, man.
Let's do it.
Let me get this chart back
Um,
here. And
while you're
so,
pulling
yeah.
up,
So the point being was just the back testing, like those patterns, just doing it, just trading based on that. Like you would have to really be perfect on execution. And then even then your win rate is like, you need at least like, if you don't get more than 1-to-1, you're
no,
maybe gonna barely break even, generally speaking. So
yeah, yeah. Oh, that's it. Yeah, it's. I
yeah,
do. I do though. I love seeing those different patterns
yeah,
because it's contrarian. But, if 90% of
for
people
sure.
lose 90% of their account in their first 90 days, then yeah, you definitely want to be not doing what they're doing, right? So it's a sad stat when
Dude,
you think about it, but
I'm loving this move for you right now, man. Talk about just
yeah,
all of a sudden the flurry of buyers coming in, and right, if you can see on my cursor, I'll actually put a line here.
it's
Like
breaking that top now.
when we had that original bullish move up where right here at what time, 9:32 ish, and then we consolidated to try and move up past the bottom of that consolidation range is exactly where price came and tested to then
Mm-hmm.
just rocket back upwards. Buyers were just
Yeah.
like, there's no way we're letting this go. So um, that's pretty sweet. I'd feel pretty good about this if I was you, Tiger, for sure. Um,
Yeah, just wished I would have gotten a better fill, but that was my own fault for being about 2 minutes late.
do you allow
But
yourself, do you ever do you have any kind of rules for your own type of trading where you get into like a certain lot size of a position, and then if price moves out of your favor, you can like get into a little bit more of that position to like, average down, so to speak, but
average
within a
in.
range. I've told you before, like I there's
Mhm.
an area where I can average my buying price if I'm not in full position already, just because that area is still valid for whatever my thesis is for my trade.
Mhm.
Do you do that ever, or do you just you just are like, whatever position I get in, that's it, and I'm not going to do
Yeah,
anything?
it so far has not been anything I've done. I've typically just looked to pick the point, and then it is what it is at that point. But uh,
Hmm.
the more and more comfortable that I've been getting with some of these things, the more I've been wanting to do that because yeah, the reality is I get in a demand zone just as an example. Well, price moves up, it's going to base again and go sideways, right? And then turn around and go
Hmm.
to the upside. So that's in my favor. So why not buy along the way? I mean, it's essentially what the banks are doing, right? So if you guys want to
Yeah.
flip over to my chart real quick, flip over to my chart real quick and we'll just take a look. I think pound dollar was probably the example I looked at the other day. Just looking at yeah. So, that's really what the banks are doing is exactly what you just said. So this is a great example. So we have a clear uptrend from this point to this point. Well, they're ultimately wanting to take price the other way. So that's that's basically what they're going to start doing. I mean, they're obviously, they're buying in this area. Let me take off my magnet. Okay, so yeah, they're buying in this area, buying down here, and then buying in this area to ultimately push price up. Well, when it gets up top, and that's what they're doing. They started buying in here, and then they're averaging down, right? And then obviously they put in a nice big order and the price continues. Okay. So that's essentially what they're doing when they're trying to capture their profits. They're selling a little bit here, but the price is going to keep going. Okay, that's fine. They sell here. So they basically get out of all their profits towards the upper end before moving price the opposite way again. I mean, the price dropped really good there. Maybe they did some selling in this area or whatever. So yeah, that's essentially what the big banks are doing. They're buying here, even though price is going to keep dropping. And then they're probably buying in this area too. I mean, this is a daily chart. So well, the point is, yeah, they're kind of buying. Oh, where's my? They're really buying all throughout this area. Buying throughout all this area as well. So they're going to be catching buys here, buys here, buys here. Well, it's going to obviously go in the negative, right? It's going to look bad on their balance initially, but they control price. They're okay with that because they ultimately can make price trend whenever they get dang good and well ready for it. So then they do their final buy and then price trends. So, but yeah, they're doing that, and then they're doing the same thing on the, to make price turn the opposite direction. Sell. So I haven't personally started doing that yet, but that's, I think, my next phase of my own, trading style is to start doing that a little more. Again, on the higher time frames, right?
Yeah.
So so I guess that's kind of my answer right now. It's something that I've been talking about and thinking about quite a bit. So probably end up doing that because all I care about is what are the banks doing? Okay, I want to do exactly what they're doing. Almost exactly.
I mean, exactly.
This
Try
isn't
to mimic it.
Right. This isn't as important for us because we're not betting, like you said earlier, millions, billions of dollars on a trade. So we can get in at the drop of a hat, no matter what position size we put on, because our accounts aren't big enough to move the markets like the banks trading their hundreds of millions of dollars. So, but yeah, one of the mentors I follow does that, and he especially does it with currencies. Just kind of averaging in, exactly what you're saying. So it's something I've been studying. I just haven't started testing on my own yet. If that makes sense.
Yeah, and it's a little bit of a it's something like you will just have to dabble in, or I don't even know. It's more so just like getting used to even executing it to feel comfortable with it, like understanding, okay, it's pulling back into this zone. I feel, let's say arbitrarily, the zone that I'm interested in is between 40 and 50. And it pulls back to 48 and you get long a quarter of your position, full position size that you would allow. It bounces up to 52, but then it pulls back to 44. And then you're like, okay, well, this is relatively in the short term. It's just chilling in this demand zone. Maybe I get in another quarter, and just eventually I feel like executing situations like that will allow you to, I guess would allow you to feel more comfortable. Or maybe that just wouldn't, maybe that would, for your FX stuff, especially, I don't know those markets. Maybe that would translate to losses more than wins. And then you would just be like, nah, I'm not doing that anymore. But
I mean, I have added positions before. Just, if I fat finger and I only put in, part of what I meant to put in, that type of thing. But, no, it's like I said, I've been kind of following some people that have been doing it, and and this is the perfect example of exactly what they're doing. They're starting to buy, knowing price will most likely go against you for a while. But if you keep buying, then that's where you're starting to follow the market maker cycle, the accumulation, and then the trend phase, and then the distribution. And then trend phase, accumulation, trend phase, distribution. That's no matter what market you look at. I mean, that's essentially all that happens, and that's why I like to trade from those higher time frame demand zones, those higher time frame supply zones. It just ping pongs back and forth. Essentially, what it does.
I I do want to update for your trade here. Just to give you a little bit of a heads up here. At 10:40, so 9:48 your time. The offers that were at 23,500, the larger offers at 23,500 and
Mhm.
23,509, they both disappeared. And then a bigger offer was put all the way up at 23,530 and 23,560. So all of that
Mhm.
volume on the offer moved up significantly. I think that's a good sign.
Nice.
In my head, that's a good
Yeah.
sign. That means that whatever algorithms are doing this are essentially saying, all right, it looks like there is more comfort for the buyers to the upside. I can get a better sales
Nice.
price than where I had my original lots set
Okay.
at. So that's how I would look at it personally.
Yeah. Well, that's
It,
from. Is that from
it,
your
it
level two data?
Yeah, that's from my level 2 heat map depth of market. So
You know
yeah,
what? It's funny
that's
because I have a penny stock. I have my penny stock broker. I'm gonna I'm gonna probably jump back into that. Just something to do because I do everything I do is higher time frame, right? So I have a lot of downtime throughout the day. So I'm gonna get back into that because it does have level two data. And now that I'm
yeah,
trading indices, um, yeah, I feel like I need to start paying attention to level two again because it definitely
yeah.
helps. Yeah, just what you just explained right there. That's stuff I need to. That's stuff I'd like to start seeing. So
It would at
good
least be
stuff,
helpful
man.
for like the Nasdaq and like if you ever taken trades in the Nasdaq or gold or
Hmm.
anything like that for sure. I would
Yeah,
say we are
yeah.
we are but yeah, we are 1 minute away from the end of our session tonight.
Wow.
Can't believe it. Time flew by. Um, so we would like to remind you that. And first of all, hi Charters. Good to see you in the chat. We are going to announce a winner tomorrow. We're going to do the 50K accounts giveaway. We're going to do one tomorrow instead of tonight. And please make sure Charters to put your email in your bio description in on your YouTube channel so that you are able to win tomorrow. And subscribe to our YouTube channels, please. And just come join the stream tomorrow, and you'll definitely be up to win. So,
Yeah.
uh, yeah. So I think
Yeah, I think
that's
we just
that's
ran out
really
of
it.
time today. So,
Yeah.
but yeah, we'll,
Yeah.
we'll be back same time tomorrow. Are you on tomorrow, Paul?
Yep. We'll both be on tomorrow.
Okay,
We'll
that's right.
yeah, so we'll see everybody tomorrow, and everybody get some good sleep or have a great day, and yeah, we'll catch you on tomorrow's session. All right,
Get my
it's good
magnet
trading with you,
moving around a little
Tiger.
bit. You too, man.
Yeah,
All right.
awesome. Have a
We'll
good
chat
one.
out to you tomorrow.
See
All
ya.
right. Later.
Hola Prime. Trade with transparency.